Tuomas Malinen.
Hello.
How are you? How are you, Thomas? So
I'm fine. Actually, you were using the war rhetoric, and it happens. I'm in Budapest now, which is just few hundred, well, not far from Ukraine. So
yeah,
I'm
what are you
close.
doing there?
We had a conference, Peace Forum, at the
Oh,
Matthius Cormenius Collegium. There was quite a nice line of speakers, including Jeffrey Sachs from Columbia University.
so after a lot of blood is spilled during a counteroffensive,
Yeah.
is that the aim of the counteroffensive, to force a peace after reclaiming territory? Is that what people were talking about?
The thing is that what Jeffrey Sachs basically stated, that Russia has been ready to negotiate peace for some time, but the Biden administration has not.
Interesting.
Yeah,
Okay.
that's really interesting. He told me, not me, us. He told that the 4 weeks into the conflict or the war, there was the peace negotiation in Turkey, Ankara, and they had a preliminary agreement which was turned down by the Biden administration. They essentially said no. This is really interesting stuff what he told, and I consider him to be so connected that he knows.
Okay. So like others have said too, like Joseph Wang, that it seems like the U.S. wants this war. Why don't you talk about why he thinks so, and probably has something to do with it's almost the same approach with China. Almost seems like we want that conflict. Is it because America's in so much trouble, Thomas, that this is like Custer's last stand for hegemony?
Or something like that, because I think I read one piece from I think it was a year ago. It wasn't in a former columnist of the Washington Post or something like that. He stated that it's about the Eurasian development, with China, Russia, and Europe coming together and challenging the the US hegemony and all that.
He says it's not that.
Yeah, well, Jeffrey basically, he didn't go into that, but in more detail. But he talked about the U.S. hegemony and how they're trying to keep that. And he's been dealing with the politicians at the Hill for 40 years, so he's rather well connected, I would say. And I think he's great. We need critical voices at this time, I think. Because the European voices are mostly the politicians are saying we need more war, and it has never led to anything good in Europe.
Yeah.
So
okay, so let's get to your bailiwick. I know you pay attention to geo stuff, but first I want to ask you about the banks.
Yeah,
and since we talked, with SVB yesterday or the day before, Yellen said that there will be more consolidation in the banking industry, and to me that's a buzzword for there will be more failures. Tell me where your head's at on this banking situation.
We're currently building a model based on the Great Depression, especially the Chicago bank panic in June 1932.
It was in June, huh?
Yeah, in June, between 20 and 28th of June, 1932. And we're building a model just to see. The thing is here now that what many don't understand, that we have kind of returned to the era where the banking panics are really the classical ones with the massive deposit outflows. Do you know, by the way, how big of a share of depositors tried to withdraw their deposits from the Silicon Valley Bank during the 2 days?
The percentage of accounts?
Yeah, percent of accounts.
I don't know, 80%.
87.
Okay.
We haven't seen such a run in any Western country since 33.
Okay.
So
let me ask you if the fact that at first there was going to be no bailout. I don't know what this is, a bailout. They're saying it's not a taxpayer bailout.
Yeah.
What's the next step for U.S. banks? I've talked to guys like Hugh Henry, thinks that there's going to be a move to limit withdrawal of funds
Yeah,
to a
that's
certain
possible.
limit.
Yeah, that's possible because they would. The thing is that there is so much deposits, and the problem is that the banks do not have the liquidity to cover the outflows.
Yeah.
I don't have the figures yet, but the thing is that like most of the assets, they are regional banks, they have heavy exposure to the real estate market, and
Yeah.
you cannot liquidate those assets.
No, you can't.
So
People are just handing over the keys on
yeah,
what used to be trophy office buildings in
yeah.
major cities.
So you make
So
even losses out of them. But if you have a deposit outflow, you need to liquidate from the asset side. And if you have a lot of real estate loans, you cannot have it. The thing is that the bank term funding program, some banks have a lot of assets. You need to post collateral for it, but it's very unevenly distributed. I don't like to I don't like to say the exact figures yet, but we run scenarios of the failures of the US banks, and they range from a mild recession of few hundred banks failing to a severe one with, like, let's say 2,000 banks failing. They are truly horrific.
I think we only have 2,400.
No, you have 4,000
Oh, okay.
something,
So half.
700 something, yeah, that
Okay,
are
half.
classified as banks.
Okay.
So that's in the FDIC database and all those. And it's a the figure it's
So do the equity markets just keep whistling past the graveyard, which the
yeah,
graveyard is a banking crisis?
yeah, but
When do they care?
I think I think they have started to notice something now, because I think the equity markets will react when the recession, which is now coming, is it becomes evident. Then they start to think.
When's that?
Well, it's difficult to say when it's coming, but
I want to know what hour. I want you to pull the WD Gann off for me, and you tell me he knew months in advance where wheat would be at a certain time of day. So
well, we will sort of have based on academic research, we will sort of have a very good guess which banks will fail.
All right. Well, you brought up June in the 30s.
Yeah.
I know an analyst friend of mine that I used to interview.
Yeah.
That it was important for him to get the message out. He's passed. He was looking for a July crash. He called the March low.
Yeah.
And June and July, kind of, right around each other for there to be some type. And do they want this to happen for it to speed up the adoption of CBDCs?
Well, that's
Is that part of the whole deal?
That's the worst case scenario, that they will when the CBDC of the Fed is launched, probably sometime next year, they will just let the banks fail.
Yeah, the Fed is a treasury now.
Yeah.
Because currency used to come from our treasury, Thomas.
Yeah.
But this is called a central bank currency, not a treasury department.
Yeah. That's how it is. And there's really the history of U.S. banking system is really interesting, actually. Like, people argue that the deposit insurance, the federal deposit insurance, is what saved all, but there were several regional private deposit insurance schemes that worked really well before that. So, and the thing is that this banking crisis is probably the first one that is caused almost solely by the regulators, because they pushed massive amounts of deposits into the system. And also with the very low rates, now that the loans went through the roof, and then they forced banks to buy US treasuries at the peak prices.
Yeah, exactly. So it's not like the Fed was unaware of what their policy of going from 0 to 5% was going to do to the books of the banks, right?
Yeah, and just consider that the yield of 2-year treasury went from 0.0
Yeah.
to over 4% in 2
Yeah.
years.
Yeah.
Just put that figure on the discounting formula and calculate how much is left from the value of the asset.
Yeah. Yeah.
It's
20%,
not, yeah, it's not
10%.
much. Well,
Yeah.
it's a 20-fold rise. So basically, it's if we would calculate it purely, it would be worthless. But of course,
Yeah.
it doesn't go like that. But
Well, how about Europe? They were buying bonds with negative rates. It's got to
yeah,
be worse there.
it is worse. And well, we had the credit CIS already, and Deutsche Bank is just around the corner.
Okay. So
So
he's same strategy here. I think last time he thought there'd be a decent break in the market. I know you profess long precious metal position. Gold is holding up okay. So
yeah,
I do think right here's the picture. So,
yeah,
this is important. If we get through here,
yeah.
maybe there'll be a buying opportunity under 1800 one more time. Because, can't this be the kind of thing when it gets rolling that everything's bad at the same time because it's a liquidity crisis, and when that happens, it doesn't matter what the asset is, it's all about raising cash.
Yeah.
So if we have that kind of crash in the market, that it takes everything down with it, and that's when you'd probably want, but things like gold hold up better in percentage terms, a lot better than things like the triple Qs.
We are expecting the gold to go through the roof when this really gets going.
Yeah. Okay.
Because that's the traditional safe haven from the bank runs, but still there's the possibility of cryptos also rallying.
Okay.
At that point.
All right. So we're having a pretty big move in yields today. So
yeah,
bonds are, to me, the important areas now are 360, and they actually could break out. Could we have this happen and not have a flight to quality, but have higher rates because of the supply? I mean, like TLT's 20-year paper, where they could flush and they could be the cause rather than people looking for the bonds to cushion. They've led all the way down during this crisis, and compared to the stock market, when you think about it, this isn't much of a recovery in the bond market, is it?
It's not.
So
No.
you still bearish bonds, and that we could make new high yields with all the supply coming in here?
Yeah, it could be. Could be very well. I think the summary is crucial now because if you look at everything that has happened in the real economy, something needs to start to break during the fall. It's a
Can you
miracle.
believe that the VIX is 14? That's where it was in before the top in the market.
Yeah.
Well, 14. Okay, in 2021, maybe even a little higher, 18.
Yeah, but I think the question with the markets is now, where is the liquidity? What I read that it's not very high, and if it's not very high, then people are in a waiting pattern, and then you get these wild swings up and down.
I've noticed some air pockets
Okay.
in the trading because I watch it a lot, and especially when things get a little fast, that my price quotes are all over the place. So that may speak to structure. They may wish they had market makers there someday. Okay, so any new writings or anything you want to feature while you're here?
There's something on the few figures I would like to share.
All right, let me stop sharing and you take over. There you go, buddy.
We have been doing trying to analyze the where is it now? There it is. So this is this is our, like, we do it every month. It's an outlook, and this is a special issue on the credit crunch. And these are forecasts, but these are like, you can throw dice with economic forecasts at the moment. It's the uncertainty is so massive. But considering the US is that if you look at these manufacturing figures,
No,
they're not good.
no,
They are like the manufacturing recession has already begun. And
right.
the services is kind of keeping up, but it's just, I think they're just manufacturing, just pulling everything down. But now we get to the point here, and this is interesting. This is the inflows and outflows of deposits and money market funds, and they are truly ships passing in the night. And the interesting thing is that this happens at the crux happens at the beginning of November already.
Okay.
So and it's not clear why this happens in November, except or late October. Is probably because something to do with the credit failure of the credit season, all that. There is like this is a signal of mistrust to banks, I would say. And the thing here is now people need to understand that this, like if deposits fall, you need to balance it, but this removes the ability of banks to give out more credit.
Yeah.
So when deposits go this way, it's not just a bank run issue; it's a credit issue. And if you look at the demand for commercial industrial loans, it has collapsed, and this started at late October too.
Okay.
So this is already, people talk about credit tightening or crunch. This is already going.
No one wanted it before there was a credit tightening cycle.
Yeah, yeah. And now
isn't that what that chart's saying? No one really wanted the credit before
but
we had.
This is flight to safety in the real economy.
All right. And
so that's what
it doesn't matter what the rate is if you don't have credit. Flowing,
it doesn't matter. And this is one of the deepest like downturns or falls in this demand ever. So it's so it's telling us something that, I think there is the credit failure of the credit says in October, or the near failure in October was kind of it pushed like everyone to this flight to safety mode. I think this is what this is presenting. So it happened then.
Okay.
And if you look at this, the M2 of US changed from a year ago. This is really exceptional also.
Yeah.
Massive increase and then just falling like a,
like over Niagara Falls.
Yeah. And this will have an effect. So I think we have the US is in credit tightening already, and Europe is too. But the possibility it will get into actual credit crunch or even credit depression when the recession gets going. Just think if there are bank runs. There's one more thing I want to show, and just to give a picture. I think I need to make a new share here. There's somewhere.
You have any comment on China banning, their new policy of security over profit, and saying bye-bye to Micron and singling out other companies? You think they'll say Apple, to their population, don't buy Apple anymore? Take down an American icon?
It's really difficult to,
Okay.
predict it. I don't know.
Well, I mean, did that guy talk about the US and China at all, or strictly Ukraine?
It was mostly Ukraine.
Okay.
So that was like, because that's the biggest thing here. But I show one more thing and then we can conclude with the Ukraine. This is a 4-week moving average of the growth of bank credit in the US.
Yeah.
And there is this heavy drop in March. So if the Fed would have not stepped in and stopped it, the US would be in recession already.
Aren't they going to continue to do that?
Yeah, but the thing is that how do they do that? They have like two nuclear options. which is that they restrict the withdrawals from banks, the
Right.
deposits, which would be unheard of, or then they cover, make a universal like
Oh yeah,
deposit
guarantee.
guarantee.
Yeah,
So these are highly exceptional, never before seen actions, and it tells you how bad the situation is.
yeah, it does.
And like I've been telling here also here for some time, the perfect storm would be such that we would have a bank run, massive bank run. But then we would also have an escalation, another escalation in Europe and possibly with China. So
Yeah, that
this
is.
is like the dangers, the risks are so massive currently that I think the equity market is they are completely asleep.
Yeah. Okay. There's no geo risk priced into a 14 VIX. I'll tell you that.
No, nothing. It's
I've never
unbelievable.
seen. It's amazing. There are more things to worry about than there were a couple years ago,
Yeah,
and people are less worried than they
yeah,
were then.
yeah. It's really
Anyway,
strange.
we were talking about that. So, anyway, I guess the right thing, do the right thing today, everyone, and tomorrow will take care of itself. That's a promise,
Yeah,
right?
yeah, yeah, yeah.
And it's always great talking to you, Thomas. I look forward to it. Isn't it amazing how fast 3 months or so fly by nowadays?
Yeah, it goes really fast, and
Yeah.
the developments in the middle, they have been rather massive. You know, when Joe Biden went on the television on the, was it on the 13th
Oh,
of March,
yeah.
and told U.S. citizens that their deposits are safe, I was just horrified, because you don't do that unless there is a risk of nationwide bank run.
Yeah, I was I can't you're talking about his speech from the Oval Office, his
Yeah,
first speech, and underneath it said crisis averted.
yeah,
Yeah, that reminded me of President Bush's mission accomplished,
yeah, yeah,
right?
something like that.
So I
Yeah,
know. So yeah, that made me very nervous when I saw that.
yeah,
So crisis averted. It's just like, people were worried about Y2K and nothing happened from Y2K, but everything they were worried about from Y2K
yeah,
happened anyway.
yeah,
We had a bust in the market, we had 9/11, we had all kinds of things happen after the year 2000. I think that was the beginning of the new era.
yeah.
Um,
But
Thomas, go ahead.
I said this one last thing. I think we should consider, we have been like raising that possibility for, I don't know, 3 years now,
Yeah,
that could we actually be heading to a repetition of 1929 crash followed by a banking crisis. So I think we have to, that has to be acknowledged, the possibility that the markets are so overvalued concerning the macroeconomic fundamentals now that they have to correct in very heavy way in the fall. So I think this is something all investors need to ponder.
okay. In the fall, everyone thinks it's going to be in the fall. Why can't it be in July?
Well, it can, but usually the market activity is just,
Yeah.
lower, and summer, everybody's cheery on the summer. So unless
Yeah.
there's something major in the geopolitical front, I don't think, yeah, I don't know. I don't know why they are usually happen in the fall. I don't know, is
Well,
there
I'm just
any,
saying it's too pat because that's what everyone's looking for. I think maybe it happens going into the fall and
yeah,
it's over by the end of the year. Anyway, yeah, a lot of people saying October.
yeah,
I just, we'll see.
we'll
Keep
see.
an eye out on July.
Yeah,
That's where my friend said he was looking for a crash, and he did a lot of astro stuff. So, and it was important enough for him to, when he wasn't feeling well, to get the
yeah.
message out to his followers. He called the March low, looking for a July crash. So,
Okay, yeah, that's it. Yeah, yeah.
yeah. So anyway, I'll name it after him, the Francis Boussier crash when
Okay,
it happens. Okay.
yeah,
And
yeah.
I'll name something after you. I'll call the bank failures, bank closures. I'll call it the Malinen forecast of banking dissolution.
Yeah, okay.
Like
Well,
that?
thank you. Yeah, well, it works, I guess.
Okay.
Yeah.
The MT crisis unfolds in 2024.
Yeah. Something like
All right. All right. I'm a fan.
that. Thank you.
All right, buddy. It was great catching up.
Yeah. Likewise.
Take care, and I'll send you a DM on Twitter so we could be talking in the fall about what we just, discussed.
Excellent. Let's do that.
All right, everyone. Tuomas Malinen, follow him at MT Malinen. Check out his letter. It's a dose of reality that we all need now and then with the markets going parabolic. So that's a wrap, everyone. You could join the team in 15 minutes on the Morning Edge, and I'll see you to wrap it up, TGIF tomorrow. Thanks again, Tuomas, and everyone for your attention. Hope we're adding value. Adios. Oh yeah, don't just count your pips, count your blessings. See ya.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.